Be able to push Zoom, YouTube right now. Okay, we're live. Good. Sorry about that slow start. We are going to be pushing towards all-time highs again today. Looks like we're inking a deal with the European Union. We talked about this last week with Japan falling in line, the August 1st deadline, kind of that final Hail Mary to get the big trade partners into um, the work. So European Union looking better. I'm not sure what the details are, but the markets are somewhat excited about it. Futures up around 0.5% or 0.15%. SPY pre-market is up a little bit. I hate to say it, but I'm still looking to do similar to what we did last week. Look, we're opening up at all-time highs again. I'm still looking to fade these moves. And, you can argue, well, we should just be bullish. You can be bullish if you want to be bullish. But I think this market is melting up until it's all priced in. And whether that's, the European Union gets priced in, whether this is pushing until the end of the month, we get through FOMC on Wednesday. We still have non-farm payroll Friday. We have the tariff deadline on Friday as well. I look at the technicals, and to me, on the bigger picture, this market is um, it is overbought on a lot of indicators. The sentiment is tilted very like the boat is very crowded to the bullish side. And I think this is one of those point times where puts and insurance is very cheap. I just want to make sure we have some protection on the downside as I think a 4, 5, 6% correction minimum is likely going to be seen. We've taken it all-time highs. Price action that's playing out right now is very similar to COVID, where we dropped 30+% during COVID, ripped all the way to the highs, had a 10% correction, had an 8% correction before we proceeded higher through the rest of 2020 and 2021. So anyway, opening up a highs. Looking at some of our key levels today. Let me get the chat up here for everybody. I'm not sharing screen. That's my fault. Let me get the chat up. Okay. Did anybody have difficulty getting into the session this morning? So if you're clicking in via Telegram, whether it's click here to join the room, click here to join the room, any issues joining? No. So if you click on this, I'm just wondering, so what happens, Dave? I mean, the session starts when I start it. So if you're in early, that's fine. It should just be like maybe you're churning like host will, start the session, something like that. So anyway, you're here. That's good. All right, I'll set the chat. Everybody can see chat now. Okay. Yeah. So waiting to host a begin session. That's what I thought it would be. So if it's because you're in early and I haven't officially started the session yet, that might be what's just waiting, and it'll kick in once I fire it up. So, all right, let's talk to key levels. So VIX, it's probably going to be in the 15s. Let's bring up 15.19. We can get a bit of a pulse on the VIX this morning in the first maybe 10, 15 minutes, maybe 10, 15, 20 minutes. 15.19 rough calculation right now is 15.19 divided by 16 puts us up around 0.95%. We still have a large gamma level right around that 6,400 handle. It didn't quite breach last week. If you recall last week on Friday, let me see what I have, if I had levels saved here from last week Friday. This would have been, I think this was Thursday last week with that big level. This had to have been Thursday because Friday was still just a slow grind to like 95 and then fell off at the end. I did hold profit all the way to the end of the day on Friday. The line in the sand at 95 was tested. I was only down, like the most here was down about $300. was about $300 and came back and gave us a full winner. So that was worth the $1.45 that we took last week. Worked out well. I didn't love holding it all the way to end of the day Friday, but it worked out pretty well. So that's where we're at. Aggie, I did some crash insurance last week. We took a trade on MES. MES is not a bad one. MES, XSP, not bad ways to play it. I looked out to October expirations, and the trade I took on MES for micro futures. It's the same. I mean, it's the same feed as ES, but obviously different contracts on options. But I priced in a like 6,000. So we were trading right in here when I took the trade. I did a 6,000 by I think 54.50. So in the futures market, this was micro futures. My debit was $250. So that's what my insurance cost me, right? My $250 debit, potentially to pay out $2,500. Now, realistically, in order to get paid $2,500, I need price to fall to 54.50 and stay there by October. To me, the reality is if I see $250 of crash insurance start showing me, maybe $500 of profit, maybe 700 and some dollars of profit, maybe even $1,000 of profit. I think to me, if I can take 250 and make 1,000, I'm going to take the profit. So that way I can take a little bit less time in the trade. If we have a pullback, and by the way, daily chart overbought conditions, this may have popped up on like all indexes, which is yep, this is another good sign. Like you don't see this very often. See this little red line here? This little red line right there is the same as we saw there and there and there, and they all led to either sideways or dips. This is overbought conditions on the relative strength as well as divergence where price momentum disagree. I don't see this indicator print very often, but I always take notice when it prints, especially on a daily, weekly time frame. Okay. So again, same thing I was doing last week. I'm just cautious at these highs for a needed correction. Okay. Nothing I want to get super bearish about, but a correction that I just think the market has to pull back. Pull back to the 21, pull back to the 50. It's July and the market may not give a crap about anything until we get through July, and then the market cares starting in August. Maybe the market cares after this tariff deadline because all the good stuff got priced in and we have earnings season now, and this is all Mag 7. So the things we're going to have to contend with this week, okay, this week with it being a macro Monday session, and services last week did pretty well, did very well in daily profit play. We have a couple trades in from QQQ IWM added into waterfall income. We'll have a live class today on waterfall income around 12:30 p.m. Eastern time. Newsbreakers, we had a winner on Google and a loser on Tesla, but I'm repairing that trade on Tesla. So the plan on Tesla is to flip the shares for some bucks because I'm keeping the shares from the assignment last week, and my break even's down to like 319. I see the Tesla's opening up at like 320. So I'll just keep watching, but I'm going to try to flip it for like $1,100. And then once I'm in a good position, I'll keep rolling it. Double ups, I didn't place a trade because we didn't hit the 6,400 level. It might still be directional enough this week to find a good one. We just have like super low volume gamma levels. It was at 6,400 that hit, and it didn't reach by Friday. It was close. 6,395 was close. Pinch point, we had 2 winners last week, and we added 2 more trades. Crash insurance, I did take a class or a trade last week on MES or XSP. That was the way I priced it out. Project Options Edge was active last week. I think we had 4 winners last week, closed out, and also issued a couple new trades. So active in all the services last week. Good lessons as well. I want to talk more. I know for some of the trading lessons we had last week, we did what to do when assigned. That was a fun lesson. We can spend some more time doing that, or just revisit this lesson. I think this is a good one. At the money, in the money, out of the money. All of you did very well, just answering some of those questions. Where we're at in the options chain, whether you're trading calls or puts, understanding, position wise. If you're in the money, we typically pull in more credit. You're not really giving the market a head start. If you're in the money, you're just paying more money for debits or you're pulling in more credit. Um, Out of the money, we're usually getting less credit. We pay way less for debits, but we're lowering the probabilities. That was the big trade-off we discussed last week. If you want high probability, you're typically going to sacrifice some of the credit if you're a seller, right? Out of the money is, you increase probability that prices will stay out of the money. Most of the options chain, the rule of thumb right now is roughly 70 to 75% of all options are going to expire out of the money and worthless, which is a lot. So if you think about as we talked about, kind of that distribution curve of if this is what the bell curve looks like, you have your one standard deviation. Most of the time, all of the options within this roughly 30 delta, I'm drawing that very well. Ugh. This 30 delta and this 30 delta, most of the time within this area, you're going to see these are all the tested levels. The lows get tested, the highs get tested. This is going back to last Monday's recording of the guardrail trade. This is what market makers do every day. Now we have zero DT. This is what they do every 2 days, 3 days, 5 days, every week, every month, every quarter. And how this correlates with the S&P is also based on the VIX. So low VIX, high VIX. I like to sell premium at a slightly elevated VIX. 15.22 might seem like, oh, well, what a low VIX. Not really. The VIX has been down into the 12s before, 13s before. But what makes me a little bit nervous is there are funds out there that trade volatility suppression. And we have been in a reduced volatility environment since we had the flare up in April. So once we've come all the way down into the teens again, the highest we've gone is about 19. The lowest we've been is what we saw last week around 14.92. I think that long VIX is still going to be a play. The hard part is to time it. But if I'm giving myself around 60 to 90 days between September or October, I think the VIX at least has something to the upside. Okay, which means I think we have a correction. I'm curious what the bond market looks like. Nothing special. I mean, bond market's up to 86 and change. We're 86.08 dollar, catching a bit of a bid here overnight. So from Sunday's opening time for Forex, you look at anything dollar related, things are up. Look at your currencies. Dollar, pound, CAD on top, JPY also up there. Swiss and Euro down. Interesting. 50 and 50 on the vertical axis. A little bit. I'd still say medium volatility in currencies, but this is why I said I'm not selling the dollar. I think the dollar has room to, come back into the 100s. So 100s on the DXY, 100s to 101, or maybe even 102 on the DXY. If smart money is going to take a dollar and push the dollar into a secular bear market, I think we rally into past support, and that's around the 10, the 101 handle, and then we start to see topping patterns and it resumes the downtrend. But if the dollar catches a bid, bonds catch a bid, stock market takes a little bit of a dip or breather, that's really all it is just a breather. I think that's enough to get some short-term movement. The tricky part is, does it happen when nobody's watching? Does it happen like during August when Europe's on vacation? Is that why Europe inked a deal, is because they're not going to get one done in August because they're all on vacation? Markets tend to slow down, but then we oftentimes can have some high volatility events in August because it's a low volume environment, right? So it could be tricky. And then September is usually like the worst month of the year. Seasonality wise, September is typically like September effect is a known phenomenon where it's just people cut their losses off and they tax loss harvest, and then they try to finish the Q4 as strong as possible by riding their winners. And usually at this point, if we're at July, August, I mean, people are going to look at the portfolio and say, what's doing well? Ride those out. What's doing poorly? Cut those losses, right? That's always been the September effect. We tell us when to buy the VIX. I'm not going to buy the VIX, Robert. I don't like to buy the VIX because it gets priced out pretty awful. You can trade VXX, you can trade VIX futures, you can trade. My favorite instrument to do is to buy the SVXY. So if we have a big flare up in the VIX, if we see a big move up in the VIX, what I typically look at is SVXY. Okay, So I bought SVXY during the April crash. I bought it here around $34, and I wrote it up here towards the U.S.-China trade agreement gap. So from about 34 to like 41. I had 200. I bought 200 shares for everyone's account. Once we had this first gap, I closed half the position, and then when it ran up to the highs again, I closed the other half. So I have not grabbed this last little bit as the VIX continued to go lower. This continued to go up, but still, I mean, riding this thing for $7 a share, and then seven and change a share, it was a good trade. To me, this is a lot more stable and safe. And I just bought the shares and bought the underlying as opposed to trying to time the VIX. So VIX is difficult because I didn't get the profit that I wanted on long options, and I timed it great last year when the VIX was this was before the July August correction in 2024, which was here. You're like, oh my gosh, that would have been a great trade. Yeah, I was long the VIX at freaking $15. Okay. And when $15 went to $23, I was like, that's a good little trade. But instead of having, if I bought a $15 call and it's trading at $23, I'm thinking, man, my VIX trade should be up to like $8. But it wasn't. It was like $4. I was like, what the heck? It just like the real value of my VIX call option was not what it should have been. And that was really strange. So then we had a little bit of this run up into the, high 20s. I took the profit because it was enough of a hedge for me. I was happy with it. I paid, I don't know, $500 for a VIX hedge, and it was showing like $1,500 profit. So I took it. But then a day later, we had that Sunday to Monday, and the VIX spikes up here. Although this is kind of like a false reading because it wasn't really tradable. By the time this was Sunday's futures market coming back down, the VIX was down here in like the low 30s. So it would have been very, very difficult to get like max profit on this thing. However, there are better ways to trade it. Hedging the overall portfolio, hedging on indexes. It's a little bit easier. You get real value prices. I just don't like the VIX. So I'll tell that into this. There are volatility suppression funds that all they do is focus on selling the VIX. That's all they do. And this is really the market's way of running against those funds. It does happen, right? And so what we have noticed is there is this whole new philosophy of like pinning VIX prices, pinning gamma, suppressing volatility. And the two key levels that I watch is 19. So if we get to 17 or we get to 19, those vol suppression funds stop buying, right? They stop trying to suppress the VIX at 19. So they basically are like on hold at 17. They're stopping everything at 19. And that's typically why when we get a 19 VIX, the next stop is 20 plus. And 20 plus can easily jump to 30. And that's where things get a little bit wild, right? They can jump to 20, 30, and then they can revert. It's rare to get that spike into the 40s, 50s, 60s without having something very scary, happening. But a jump from, let's say, 15 VIX to 30 VIX is going to be noticeable in the markets. But these, like, they're all they focus on is like selling volatility. And at some point, if we have a big spike up, they stop. And then there's no real resistance here. There's no guardrails on VIX. And that's why we get those big spikes up into the 20s and 30s. It usually reverts. It usually turns and goes back down. But obviously that type of explosive movement can give us meaningful corrections in the markets and higher volatility. Okay. All right. Dr. Barnes, where we find these recordings. So these sessions here for Daily Profit Plan, the nice thing is since I am streaming this on YouTube, they will be available on YouTube. We should be live right now on youtube.com/financial wars. So you'll see that we're going live right now. This is me. So this is our session. And we should change. I'll see if we can change these thumbnails. So this isn't the final hour, or is it? 6 days ago. I'm trying to think. No, I guess that's my 3 p.m. session. But anyway, so this session here will be live under the live section. You'll see this one Daily Profit Room, Monday through Friday. Yeah. So they'll be recorded like automatically, and you can catch it on YouTube anytime. That's easier than trying to do it in Zoom, process the video in Zoom, send it out to members in our one-click trading member portal. So if you want to check out any recordings or archives, youtube.com/financial wars. That'll be easiest. Okay. All right. Let's see here. For anybody, I see the question there from Kim, crash insurance. If you're in my crash insurance class, we posted the trade alert last week. The trade is still valid. I'm out in a trade through October. I traded MES, which is micro S&P futures. If you wanted to trade XSP, that is basically the mini index. That's also cash settled. So you have SPX that's cash settled index. You have XSP that's cash settled index. It's just a tenth of the price. So it's fair. I priced out MES. It was about a $250 debit. XSP would have been roughly a $500 debit, but that payout was also around like $4,500. So it was like risking 500 to make 4,500. So not bad. They roughly were about 10 to 1, whether I did the MES trade or the XSP trade. So that was posted in that classroom last week. Okay. All right, 927. Let's calculate the numbers today based on the VIX. Again, VIX at 15.23 right as we come into the open. So we're going to be looking right around 0.95%. 15.23 divided by 16, 95.18. So I'm just going to go up 0.95% from the close. Oops. So the close on Friday, 0.95. So 64.50. So potential top today around 64.50. And potential bottom, we have to watch the VIX closely, but right now the potential bottom would be sitting right around 63.30. Okay, so just a couple levels there. As long as I can sell some call wall levels today on the call side, 64.20, 64.25, it might be a similar approach to what I took last week, which is if I can sell here with one contract, and then if price comes up to test these levels, I will probably look to sell more contracts at a better fill. So if I take this trade for, let's say a dollar to $1.50 credit, and I'm just doing bear call spreads, that would just be on one contract. But if price pushes higher, then I might add more at the monies and add a second, third contract and see if this in fact is a call wall that holds. If you come in the market today and it looks like we're just going to keep melting up into this larger gamma level, this is just a 0 DTE. If we're going to melt up into 6,400, kind of take out that round number, get to 6,420. I mean, if you did a bull put spread and it goes up, that bull put spread is going to be easy money today. I'm still very cautious on this whole thing. I look, part of me loves the fact we've had this melt up because it's just easy money. But as it gets easy, this market's going to pull back. And I mean, especially in a 0 day environment, you're either right or you're wrong. And I know that all it takes is a week like this where it's big earnings, Fed, non-farm, deadline, all this week. And the market, certainly like Wednesday, Thursday, Friday, with earnings, FOMC, Mag 7, and then Friday's deadline, non-farm payroll as well on Friday. The market has all of these ways and reasons to be pretty volatile. Okay. Volatile is not a bad thing. I'm just saying like the volatility is where, this bottom potentially is not safe, right? But here we are getting some live price. So we opened up 637, might be a bit of a melt up, kind of poking these highs again. That gap from close on Friday gapped up to around 0.14%. We take a look at the options chain here. Do you look at gap up? I mean, there's gaps every day because of opening bell, closing bell. I'm usually watching the futures market to see whether we're up or down. Okay, so SPX for today. All right, today's the 28th. All right, so I can sell, VIX is at 1523. Are we going to be going up on the VIX? And this decision's kind of made by, I don't know, 10 a.m. or so. But if the VIX goes up, we're probably fading for the day. If the VIX goes down, we're probably going up for the day. It could go either direction. I don't exclusively make my decision based on the VIX, but I feel like I can confidently kind of call the highs here. So, how much credit can I get into this like 64.50 zone? We're about to find out. So one trade I'm going to look at for a pending order would be if I sold 64 and I buy the 64.50. Can I get this thing filled? Right now it's offering $8 credit. I'm going to try to get this thing filled for like $45 credit because that's essentially the top for the day. So if this is $50 wide and I can get $45 credit, I'm going to place that trade. That's not going to get filled, like not right now. Now the current trade I want to look at is if I go up to my tops for the day, selling a 64.40, selling a 64.50, you get zero premium for that, like 25 cents. I'm not going to take 5 wide spread for 20 cents. That's a terrible risk reward. So I've got to be more in the play zone of these current levels here, 20 and 25. So what I'm going to look at here is if I sell a 25 by 35, 30 by 40, I can get $1 on that. I think that's a pretty safe dollar to pull in today. See if I can pull in $1 on this trade. Okay, let me cancel that. That was a 20, I believe. 25. Let's go 20, 64.20 here. Okay, this is similar to what I had last week. So I'm going to try to go $1.45 credit. All right, I just got filled at $1.45. Okay, so I'm doing bear call spreads into my resistance levels today, and that's going to be just a small trade for starters. I'm still willing to sell more if we get into these highs for better premium. I'm just going to start with one contract because if the price today is sideways, then these are fine. If price today is down, these are fine. If price today is slow and slow and slow and still grinding and grinding and grinding, then we'll see where it takes us by the end of the day. Okay. All right. So daily profit play, Telegram alerts, posting a trade right here. Today's the 28th. Okay. So $1.45 credit. All right. This trade is posted. Potential highs. 64.50 based on VIX. Okay. So that's in Telegram. So let's see. And if price falls this morning, then that $1.45 will show us some profit pretty quickly. So realistically, if I can take this down to, 95 cents, 85 cents, I'd love to take it down to 45 cents, grab a full $100 on the day, or be like, yeah, screw it, I'll let it go all the way to expiration. I don't really like doing that. If I can grab a quick like $50 to $100 out of this trade, I'll take it. Okay. So that's in. Let's see if this is going to offer up. I'll put a take profit here. Close. I'm going to go Well, we'll watch first before I just start throwing. If I throw a take profit out here, I'd say 95 cents or lower. But if price is going to cooperate and go down for us, like price is pretty sideways right now. If price falls back to this gap at all, let me check a couple chart alarms. If we take out this little close from Friday, let's see if we take out this low. So just say check the daily. So check the profit if we fall lower. If we rally up to 20 and 25, then those deltas, by the way, are sitting around a 14 delta. So probability is that should not be like tested is one thing, but it shouldn't be closed beyond. If we're going to see like a nice contained kind of Monday trading, we shouldn't kind of breach those levels, hopefully. So let's see what happens. But chart alarm set at 86, and then chart alarm set here around the threat zone for me would be 20. 64.20. Testing call side. I'm getting 30 cents credit. Well, you shouldn't be. I have two trades in for over $1. If I go 1, 2, 1, 2, I'm still showing $1.25. It's two bear call spreads there, Art. Make sure you're setting up for the bear call spread if you're taking that trade. It's in Telegram. Let me post it in my tracker here. So today, trade number 962, 728. Center price is around 63.95. $64. Okay, pulled another $1.45 credit in this one. And we'll keep an eye on price. So VIX 15.2524. If the VIX goes up a little bit, let's read like a, I don't know, let's get like a 15.6 or 15.8, maybe chart alarm on the VIX. If we're going up in the morning, then that should be pushing prices down. I do want to check some key levels here for unusual whales. Randy, that's fine. That's okay. Telegram for what, Stacy? My general Telegram, you can all join. My daily profit alerts, you got to be in the service for that trade. But if you're in the daily profit play alerts Telegram, you can get that link in your classroom. Yep. All right, let's check some data here. So SPY, I think that 6,400 should still be a pretty key spot. I mean, 640 SPY, still a key level. Let's go SPX. It's still right at 6,400. Like that's just a key spot. With all this open interest, I want to see where we have on the gamma exposure. So here's 6,390, 6,400 again, and then not much until we get, this is kind of crazy, like 64, 6,500 are the bigger levels. So if we're getting to 65, it's going to be a slow grind to 65. So still a big resistance level at 64. You can see it here, 64.20. We are falling. We should see some immediate profits on that trade this morning. It's already up 55 bucks. I'm just going to go ahead and take it and move on. So if I can trade this thing down to 90, that'd be 55 bucks. It's going to take the profit real quick. Filled at 90. So I'm out. I'm done. Daily profit play 145 down to 90 cents. I'm taking the profit and I'm done for right now. I'll take the win. Not bad when it takes like 5 minutes to win, huh? So that's 55. And all that was is price cooperating to the downside. So update and daily profit play. It is 9:41. Close DPP trade for 90 cents debit. So percentage wise, it's not a bad win. Grabbing 55 out of the max 145. We're keeping about 38%. That's not too bad. Okay. It's okay. Look, the day is just beginning. I mean, if you didn't get a chance to get in with me, that's no big deal. There could be another trade lining up. The market, may cooperate where this could still be center price and everyone's into my daily profit play. We could still do our average guardrail trade, right? We can sell above, sell below, and see if price is going to go sideways for the day. I have been focused a lot these last couple of weeks on just calling my tops and selling as high as possible. Okay. The reason I'm closing out that trade so quickly is because if this is going to be a little ability for me to grab some profit this morning, and then the rest of the day, the market just goes like this: grind, 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 grind. Fine. I want to be out this morning, take the profit, and move on. Now we can focus on earnings for the week. Now we can focus on other stuff for the week. Now I can double check my portfolio and expirations for this week. I've got calls to roll. I've got stuff to do, right? So now I'll just wait. So again, there's always trade-offs. I get out of the trade for profit. I'm happy with that. Grabbed a quick 55 bucks. And if price goes down, well, I could grab more money. If price goes up, I take on risk. So I'm out of the trade. I'm happy. And I'll kind of get a flow or kind of a feel of like, what's this market going to do today? VIX is up about 0.1 points. So we started at 15.2. Now it's at 15.3, 15.36. If that takes prices a little bit lower, then that $1.45 or $1.30, $1.35 you got filled at will be showing less of a debit, which means it's profitable. But if it's sideways, 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 it's still a good trade. Just takes more time. If it grinds higher for the day, okay, just understand like 64.20 is a pretty key level. 64.50 would be hard to reach today. I think it'd be very tough to reach. But if it gets up into that 64.30, 64.40, I'm going to take that trade. Okay. So I'm still watching this trade. I'm selling the 6,400 call, buying the 6,450, but I'm not going to take that trade unless I get like $40 to $45 credit. If I'm going to risk $500 to $1,000 today, I want it to be like at what I'm calculating out to be the highs of the day. Okay. All right. So I'm going to put a pin in daily profit play for right now. I'd like to move on to some top-down stuff. Also, take a list of my portfolio actions this week. So DTE, SPY, I have some covered calls. This one, let me see. So I've got to roll Intel, SPY, Tesla, IWM, UNG, and JD this week. So I know my to-dos. Let me go over here. So my to-dos this week, earnings plays. I'll price out, we have a big earnings week, so I'm going to price out some earnings plays. Roll calls, Intel, SPY, Tesla, IWM, UNG, JD. These are all symbols that I have ownership of, and I'm going to roll some of these calls. Okay, so that's a to-do. We'll keep an eye on price for the remainder of the session this morning. Marks is out of the trade, in at 140, out at 90. Okay, all good, man. That's still a good trade. Still a good trade, still a good win. Okay. I'd like to kind of switch gears into, I'd like to talk some earnings plays. Let me ask you this. Do you want to have a little earnings? I can make a little assignment here. Let's go Copilot. Okay, I'll make a thumbnail for that. We'll add a lesson here. Do you want to talk through some earnings this morning, or do you want to? What else I want to go into? I could price out some earnings. Um, I had something else in my head, or we can do covered calls. We have a big earnings week this week. Covered call. I mean, either one. Like I'm doing both. I'm trading earnings this week if I can find a good trade. Um, Covered calls are an easy lesson on stocks you own. Okay, and naturally I offer two choices, and everyone's like two choices. All right. We touched on covered calls last week. I'd like to at least take a look. I'm going to build out some earnings first. Okay. So this is one that I subscribe to. I'm going to look at earnings for this week. So we're going to go 28th through August 1st. Okay. And I'm looking at, let's go sensitivity 3.0, all sectors, good liquid stocks. I'm not interested in like, getting lucky on a meme stock or something that's going to be a pump and dump. I want to see what do we have priced out. So I have 55 stocks. Price wise, I probably want to keep things over. Let me see if I can go to price range here. Stock price will go minimum 10 to 500. See if that filters out. I don't like trading like stocks under 10 bucks. Now we're down to 40. That's still a lot. I'm going to go a little bit higher volatility. That should filter it out. Now we have 25. Okay. So this list, so for my newsbreakers course, this list is pretty sensitive to earnings, which is good. So now I can spend some time pricing things out. And I'll add a there we go. So I'll add this there. So trading earnings. So we'll talk this. Okay. We'll talk this and then we'll touch on covered calls. I'll be in profit play I think at 11 a.m. Eastern time. I'll be in profit play. So let's do earnings first. So my plan is I want to see what past earnings have done. I want to see what stocks and symbols are also earnings sensitive. That's a good thing. So WGS, 80 bucks. Carvana. I mean, look at this. This is really, really sensitive. A 10 on the earnings volatility ranking, that's really, really high. So if you want to see like something jump a ton on earnings, or a miss or a hit on earnings is really price sensitive, I wouldn't mind taking a look at Carvana, which is seen here at 333. It's like, can Carvana blast through earnings to the upside? Maybe it can, but we have all-time highs here at 378. I'd like to pray. Honestly, I'd like to fade this move. I don't think that anything right now through maybe into the start of August. I mean, it would be really shocking to me to see August still give us a melt up. I think if August, if anything, we're going to have a pause. Possibly August is what kind of triggers a bit of a pullback. So I think what I'd like to do is let's calculate out some of these. Let me take a screenshot here so I have this list, and I'm going to keep pricing some of these out. So this is my list here, and I don't mind sharing this. So I throw this in. This is my work on the alert side for newsbreakers is I price all these out, and if I like the trade, I take the trade, I share it with my newsbreakers members. Okay, but I will post this inside of my general Telegram. So we'll go trading earnings, daily profit plan, live session, segment today on trading earnings, massive earnings week with Mag 7. And what's our total companies this week? I think we probably have over 500 companies reporting. So this week in earnings, let's do the numbers. We have 62 reporting today, 152 tomorrow, 250 on Wednesday, 271 on Thursday. Yeah, we have over 790 stocks. 790 companies reporting this week. This is a quick watch list of earnings sensitive stocks and trades I'll be reviewing and pricing out for my newsbreakers service. Okay, so WGS Car. I'm going to start with Carvana. I don't mind that trade. I'm going to go through the numbers here. So Carvana. And some of these trades that I take may not get filled. I'm going to try to get filled at like a high credit, low risk, high reward, and I'm going to try to sell like the upside of these moves. We'd have to have like a huge surprise on Carvana. Earnings comes out in a couple of days on the 30th, so on Wednesday, and this looks like it's Wednesday after close. So Carvana has, you can see the numbers here, they're all over the place. I mean, we've had 15% jumps, 22% jumps, 30, 40, 35% jumps. Those are monster jumps, right? I think it's pretty safe to say like, okay, this is 2025, 2024. We had 30% jumps in the stock. Obviously, I don't want to trade the average of 17 and try to call the top. If we're going to have a big surprise the upside, that surprise might be in the 30 to 35% zone. So what is I'm trying to think how I can structure this trade. If we price out, let's just get price. So if I go 0.35 times 335, about 117. Oh my God. Are we going to move up to like 450 this week? Probably not. But if we do, I think I got to trade for that. So let's have some fun here. Let's see if I can find something that I like. So Carvana, trade. We could try the trade for August 1st. So we have earnings on the 30th. August 1st is Friday. I don't know if this trade is going to work out the way I want to because it's so far out of the money, but it might work out okay. What is 117 plus 335? Got about a 450 move. I need to kind of have that as my trap. And I had a feeling going up that high is going to be really, really bad. Like really bad. Now, um, I can always do this. I can always place the trade with a pending credit and then see if price will fill me. Okay. So possibly a 452. So if I did 450, 452, 460 by 70. So that risks 15 for 250. That's not great. That's a little bit better risk management. Um, or I do a 450 by 460. This would be a much simpler trade if I do this. I'm being really, really conservative. Okay. Let me see if I have Carvana on here for this week. Are there any gamma levels on Carvana? There might be. Let me check dynamic trend. Yep. So 380. So there's not a zero DT on Carvana. This is all like this week's lineups. So we have earnings. We're kind of stuck in this zone around 336. The brokers are anticipating about a $42 move. I'm with earnings sensitivity as high as it is, I'm obviously giving the market way more credit. Okay. So I respect like the blow off move. I respect the 30+% runs we've seen in Carvana that I mean it'd be silly to be like, well, it can't go 17% or more. No, it totally can. It can go 42% higher. It can go 40% higher. It's gone 30% higher. Does that make sense? So I don't want to call the top with just like an average move. If I'm going to call the top, it's like price has to blow the highs off, and then I'll fade some of these bigger extremes we've seen the last like 1 or 2 years in earnings. Okay. So this trade may not fill at all, but I see some resistance here around 380. Market makers around a 40, $42 move. So that puts us kind of plus or minus right around the area. So just below 300, just above 380. If I wanted to be a little bit fancier with a trade, I could probably take a trade into the 400s, which puts us up what? If we're up, let's say $65, that's a 20% move. That's still a pretty good boost in earnings, especially sitting near all-time highs. So let me see if I can, I don't know. I'm going to try to craft the trade. If it looks good, I might take it, but do 5 wide, sell there, and I'm going to have to do like 10 wide. Nope. It's like I'm just not liking that trade very much. Let's go 15 wide. It's not enough credit. 20 wide, way more risk, not even a good income trade. So there's a potential profit trap there. I just don't like it. So I don't know. Easy trade is this. Instead of overthinking this thing, I'm going to go 450 by 460 and put this trade in for $6. I'm going to try to get filled here for like 6. I'll go $6. So that puts me at a break even. If I get filled on this trade, price has to blast to the upside, get me filled, at the money, even in the money, but mostly at the money. $6 credit puts me a break even. 450 plus the $6 credit is a 456 break even. I don't think price is going too much higher than if I calculated out about 35% on the 335. Puts me up around 452. So if I get a break even at 456, I can still make 200, 300, $400 on this trade. But it may not fill. Okay, it may not fill. But I'm going to put the trade in. So Carvana, 450 by 460, pending order. It will cancel by Friday because that's the expiration. So for newsbreakers, I'm going to issue this alert. We had a couple of these trades the last few weeks with earnings. None of them got filled. So this is a really conservative way for me to trade earnings. But this is my plan right now, is just conservative and fade. I'm fading these earnings plays, but I'm fading them off of these like big moves to the upside with a decent credit. Okay, so that's pending order. I'll put this in for newsbreakers. Okay. Google, that was closed out for profit last week. Tesla, this was a loss. So broker assigned, and I'm repairing Tesla. This one was a win. The $1.31, I think I took 245 credit. So that was 2.45 minus $1.31. That's a nice little 87% return last week on Google. All right, so JPM didn't fill, Triple M didn't fill. That's 3M, UAL, Netflix, Adobe. That was a small loss. Yeah, those didn't fill. So new trade for newsbreakers. This is Carvana. 7/28 is the entry date. Is a pending order. So it's going to be an August 1st expiration. Selling the 450 call, buying the 460 call. $6 credit. Pending, not filled. All right, so I'll issue that. I'm just going to get these like this little batch of trades built out, and then I'll post them together. Okay, next up on the watch list. So Carvana's priced out. GRPN, also very earnings sensitive. I don't even know what that stock is. GRPN. Groupon? What a run there. 10 to 40 something. Wow. Certainly overbought in the near term, overbought with some technical resistance. Let's see if Groupon has a good look. GRPN. Again, highly sensitive, big earnings prints, 30 to 35% average. So 0.34 times, so about an $11 move. That would put us up above all-time highs. So I don't mind selling that. GRPN. We go out to the first earnings on the 29th, which is going to be tomorrow. So if I went up around $11, currently we're trading at 33. $11 puts me around 44. A lot of strikes here. So if I do like I don't know, 45, there's going to be like very little open interest here. It's way up there. $3 wide. All right, see if I get $3 in this one. GRPN. Okay, pending order on Groupon. Next up, ENVX, APLD. Those are too cheap. Like 1469. I'm good with that one. Roku, maybe. Roku and Roblox, maybe. Those have been ones, some high flyers. Roku. I honestly don't know how this stock is even doing well. I don't know how many people still have a Roku in their house, but it's been low enough to buy it in the 50s, and it's been a nice range bound trade. If we had a pop up here to the upside at like 105 to 110, check the numbers on this one. Okay. And look, as I'm talking, I mean, give me some feedback. Chat's still open. You can see comments. Roku, I just want to see some of the price sensitivity that we've seen. Average move of about 15%. We've seen some jumps into the 20s. So what's a 20% mover? So if I did like a 24% move times 93.79, maybe about a 22.50 mover. So I'd be looking at like the 115 or so. So Roku out to the first. Again, probably little open interest around but I like the 115. If I went like 115 by 120, we jump to this level, go 5 wide, try to get $3 credit on this trade. I'll take that trade. So pending on Roku. Oops. So that's pending, not filled yet. Earnings on this one, Roku is the 31st. So that's like an all or nothing trade. That one actually might be better to take out to the 8th, but yeah, that might be better to take the 8th. I'm going to go out to the 8/8 expiration on this one. So 8th, that was a 115 by 120. 115 by 120 for $3 credit. Okay. Similar. And then Roblox is the next one. Ugh, I mean, just you gotta fade these moves. And this is ridiculous, man. From April, this stock has ripped up 153%. It's a free game. And kids, buy Robux, whatever it is. It's just, I mean, look, I play Fortnite, and it's a free game, and people still spend real money on in-game currency for like skins and things that give you no actually playing advantage. It's just like it's insane what this stock has done. Um, I was interested in playing down here in the 30s, and it's like from 30 to 40, 30 to 40. I had a couple good trades on Roblox. I was pretty happy. It's just like this thing has jumped out and it got all the way back up, near these highs. Pretty crazy. So average, let's go to Roblox. Average move of around, we see a jump into the 20%. So I might go that 20%er. 20%. So maybe a $23 mover. So it puts us up in the 140s. All-time high is 141. So I'm essentially like fading all-time highs. So 143, Roblox. Earnings on the 31st, which is again on Thursday. So we'll go to the 8th and 143. I'm going to go 145 by 50. Try to get filled for $3. Okay. All right. That's going to be good for now. Selling the 145, buying the 150 for $3. Okay, so pending, not filled. All right, I'm gonna get these posted. We have Carvana. And Groupon. And Roku. It's for $3 credit. And last one is Roblox. Not filled yet. All right. All of these trades are taken in to account the earnings average highs over the past 10 reports. And I'm looking to fade a big pop in earnings with a low risk, high reward credit spread. Okay, so pending on Roblox, Roku, Groupon, Carvana. See if any of those take. So the nice thing is if those trades gets filled, I'm risking less than what I can pull in credit wise. If I get filled for these trades and price fades at all, I can take partial profit along the way. So for a $5 wide trade, if I were to sell the 145 by 150 here, so if I sell a 145 call and then I buy the 150, change this to black. So 145, 150. So this is my sell This is my buy. I type this instead. So I sell the 145. I buy the 150. So it's a 5 wide spread. Okay. I'm asking for a $3 credit fill. So if it's filled, the break even is going to be 143. I risk $2 max. I can make $3 max. And I'm using the expected move and the average earnings reports. Okay. So I'm just not going to settle for like, oh, I'll go out of the money and I'll just sell and pull in, 50 cents and risk $5. No, I'm going to try to get a better fill. So I want like low risk on these trades. Okay. All right. I'd like to switch gears here to covered calls. I'll come back and I'll do my own for newsbreakers. I'll just start pricing out more of these and see if we can get a couple more that look pretty good. And then I want to start looking at some covered calls. So one in particular would be Tesla and SPY. I'm going to look at this today. I'll probably end up rolling these calls later in the week, but let me have a quick peek at them now. So for example, I just come into my positions, go to days to expiration, and I know that I have a call here that I have to roll. So July 31st, 586. I'm way in the money on this call, but my cost basis is all the way down to 550. So I'm still going to make $3,600 on the trade, but I want to roll this again. So I want to roll this possibly maybe out another, we have 3 days left. This expires on Thursday. So if I roll this out to, I don't know, August 15th, what do I get for it? If I roll it out to August 29th, what do I get for it? I can probably keep it at 586, maybe even run it up to 587. I think this would be a good example to walk through. Okay. Everyone ready to switch gears a little bit with me? So we touched earnings. I'll spend a little bit more time, trading earnings on how to play it, because basically earnings is a coin flip. Good earnings, bad earnings, it really doesn't matter. Most of the time, the correlation, this is kind of the takeaway before I switch gears to covered calls. Trading earnings. Do some notes here. Oops. Trading earnings. Most of the time, earnings movement will correlate with the broader market. So example, if SPY, or to say if S&P and NASDAQ are healthy and bullish, which we've seen for the last 60 to 90 days, earnings reports and price moves tend to favor that direction. Okay. So earnings games. If we are in an overall bullish environment, price can gap up, price can open, even and continue to trend up. Price can gap lower, enticing buyers to buy and fill the gap, continuing the trend. Type in a where yes, so that makes sense. So most of the market's in a bull market, right? Prices can start exactly where they left off and just kind of grind higher in a slow fashion. Prices can gap up, meaning they just blast off because it's like, oh, good, earnings report, great. Beat top and bottom estimates. Everyone loves it. So it gaps up and melts up. Netflix does that a lot. Meta does that a lot. Or what is tricky is when everyone's like, wait, they had a good report. They beat earnings. They had good revenues. How'd the stock drop? It's just a manipulation game. Stock drops to, maybe close to the expected move, and then it gets bought, gets taken right back into like the range that prices are supposed to stay in. But it entices buyers to jump in and just kind of stay with the general trend of the market. Right. So I think we got some screenshots here. I know I listened to a podcast last week where they talked about earnings plays. Let me see if I can grab the correlations here. Um, let's see here. Tasty's all about selling premium. So, majority earnings moves were smaller than expected. Average overstatement being 3.7%. Percentage of earnings moves that were overstated is 75%, which is consistent with the percentage of overstated moves the past 5 years. So again, it's like showing that the, expected move, meaning like what we can calculate out with an options chain, the expected move is usually greater than the actual. So as a premium seller, that tends to be a generally good strategy. Um, 6 stocks on their earnings. So like Mag 7, for example, they're all going to influence each other. Like this week having Apple, Amazon, Meta, Microsoft, those 4 stocks are still going to influence the SPY, the Qs, the general markets. That's a lot of market cap to swing around this week for pluses or minuses. And so they do have a pull on each other. Like, Apple, Amazon, Microsoft, Meta this week are still going to probably move. Google could probably move. Maybe Tesla could probably move. Tesla had earnings last week, but it could still move, right? Nvidia could still move. Earnings related stock moves are nearly a 50-50 split between up and down days. Stock correlation with the market typically drops during earnings. So let's see here. Percent of earnings reports were underlying closed up. Percent of earnings reports were underlying closed the same direction as the SPY. This is what I'm talking about. 58% of the time, if the SPY is up, earnings correlate with it. Like you're looking for a little bit of an edge. That's a pretty good edge. 58% of the time, it's just don't fight the trend. Markets are up, things want to go higher. Okay. Average correlation with like Mag 7 or like the FANG stocks. If you remember that acronym back in the day, it was FANG. So Facebook, Apple, Amazon, Netflix, Google. And then they extended that to FANG Man because NVIDIA was put in and then Microsoft put in. Average correlation of the SPY since 2020, 0.74. So anywhere between like a 58 to 74% correlation of if the general market is up, most of the time earnings are looking to go higher. Okay. So that's the safe way to trade it. If you want, kind of the easy trade like I did last week on Newsbreakers, Google and Tesla, I just did like an at the money credit spread, lost on one on one. But the nice thing is like the one I lost on was Tesla. Tesla, I'm going to repair that stock. So I'm going to absorb that loss, flip it around and repair it for hopefully a net win. Okay. All right. Trading earnings. I think that's pretty safe to say. And then we've got the numbers to back it up. So about 58 to 74% correlation of same direction between stocks, earnings, and general market direction. Now, does that mean that you can lose? Of course. 58% correlation, 74% correlation still means that price can go the opposite way, right? And especially with a lot of these stocks that I'm talking about, that it's like, my gosh, like Carvana looks toppy. Roblox looks toppy. It's like overbought conditions with divergence near all-time highs or at all-time highs. It's hard not to want to kind of fade that for right now, at least for a pause, at least for a pullback. But I could be dead wrong. So at least if I'm going to be wrong, I want to be wrong with a small loss as opposed to a bigger loss, which is why I'm not doing a bunch of stuff that's out of the money, collecting less profit, right? Less credit up front. Okay. Does that make sense? All right. I'm going to take a screenshot of this. Little lessons on earnings. So we can let that digest for a second. And then I'd like to go into rolling some calls. So this trade, I know right now I have to roll. I have to roll a call on SPY. I've got to roll some calls on Tesla. UNG, this is a 16.5. We're trading at 13.72. So this is part of my diagonal spread. I need to either close this all by itself. It's up 96%. So I need to close this all by itself, or I'm just going to let it expire and just add another trade. I can also roll it. Intel, we're down to $21. I've got 23 out to Friday. These are all up, 98%. I can roll this one as well. It's only going to give me another 3 cents of profit if I just wait until Friday. So I'm probably better off just rolling it. So knowing your break even is important. IWM, have a bunch of shares, 201s. These are in the money calls, and we're trading at 224. I'm just going to roll this. If I can roll it out in time, even up and strike, it's going to help adding to my bottom line. Okay, so before I just start taking these trades automatically, let's actually walk through a trade. So I'll give you the full breakdown of what I did on the SPY. Okay, which this trade, I did this as an example, live trade example. I was repairing a loss that I took in December on my waterfall income. Okay, so let's go Intel, Google, Nike, Beer. Here we go. MicroStrategy, Microsoft. Here it is. Okay. Let me know when you can see this screenshot. So this is my personal tracker for the accounts that I manage. Waterfall and ownership for this particular account. I started off with a 599 by 598 credit spread. Okay, I kept the assignment at 599. So initially, I'm going to make some notes here on the side. So initially, this was a waterfall income trade. So very simple. I just did a credit spread. And the original buy at 599. Okay. Now, I took a loss on the credit spread and I wanted to keep shares and repair it. So I did. I added a collar trade first, which means I sold a call, bought a put, and my break even went down to 594. So collar trade, break even 594.39. Okay. And then collar trade, break even 589.38. And then covered call 587.31. Let's see here. Rolled credit. Okay, let's keep going. Okay, new break even 586. Rolled 585. So rolled covered call, break even down to 585.85. Break even with another rolled covered call 584.72. Rolled covered call 584.72. Keep going. And then another position 5. Rolled covered call 576.72. Added another collar trade. And this is just like the maintenance. This is like I'm actively managing my position to lower my cost basis. So you can see like over the course of December, January, February, March, April, May, June, July, like all these trades just added in every typically 2 to 4 weeks. I like to take these trades. Break even is now 575.02. And then another one, I'm just looking. This one I got a really good trade on. I just did a covered call, 564.32. Keep going. Another rolled covered call. $557. I see it's a 562.22. Another rolled covered call. 554. Well, I skipped one. 557.32. rolled covered call down to 554.07, rolled covered call, break even 553.04. Okay, so initially I own the shares of the SPY at 599. I've now added enough covered calls, collar trades, rolled covered calls, continuing to roll covered calls. This trade I'm going to show you is rolling another covered call. I've done this over the last 4 months plus of just active every 2 to 4 weeks rolling covered calls or adding some type of position. 599 was my initial entry. It's now a break even of 553. Now, to be fair, my sell call strike is 586. Okay. So it's not like, well, Chris, the SPY's trading at 637. He's up, from 553. It's like he's up 80 bucks a share. I'm not, because in order for me to generate these lower costs, I'm selling in the money covered calls. So the break even is 553.04, which means my net profit is going to be around $33 per share. 586 is my strike. 553 is my break even. I'm making about $33 per share. Okay, so am I capping my upside on these moves? Sam asks, how much does it cost to roll it? Nothing. I don't roll for debits. I don't roll for debits. I like to roll for credits. You'll see that. I don't want to roll for debits, because if I roll for a debit, I'm increasing my cost basis. If I roll for a credit, I'm decreasing my cost basis. So I can keep owning it cheaper and cheaper and cheaper. So if I maintain my position and I keep rolling calls for credits, my cost basis gets lower and lower and lower and lower. And where that helps is, so this is where I bought the shares at 599. And then I've lowered. Over time, I've lowered my cost basis from 599 down to 553. Okay. Some might look at that and say, well, that's great, but price is trading at 637, right? This is the actual SPY price, and my break even is 553, but my covered call is here at 586. So yes, I have capped my upside where this is the most I can make. Okay, this is the most I can make. Versus had I done nothing, 599 to 637 is up over, $37. Okay, but 553 to 586 is up $33. Here's the trade-off. If the SPY drops, I can still maintain this profit. And I can also still decrease my cost. I can still lower my cost again. Let's say I can lower my cost down to here below 550. 550, what does that do to my profit? This increases my profit. And if I lower it down again to 545, it increases my profit. Okay. So if the market goes sideways or the market goes down, I'm going to be okay by still maintaining a margin of profit. So yes, I've lost out on some of this, ridiculous melt up price appreciation, but because I'm still owning the shares, I'm still generating income on the position, which is helping me lower my cost basis and still increase a little bit of a buffer on my total profit. So that's what I'm trying to do. Okay. So what I want to look at now is we have some pretty good call premium in the market. Here's the trade, a 586 call. And then I've got a 594 out to August 15th. So I'm going to keep those both running. This one is the closest one of 3 days to go. So it should be on this account here. It's 594. It's this account, I believe. So I have 100 shares and I have my covered call. Now I want to roll this covered call. It's got 3 days left. If I do a roll on this one, now I play around with the time and the price. So if I roll this out, an extra day, the market's going to give me 17 cents credit. Who cares? I'm not that excited about rolling out a day and grabbing, 18 cents. I am, however, at this current strike, if I roll this thing out to like the August 15th expiration and go out a couple of weeks. So now I go out from 3 days left in the trade to now 18 days. Look at what I can get for the trade. I can keep my strike the exact same at 585. Okay, or a 586. I don't know why that's weird. So I go 586. I can still get $1.50 to $2 on the trade. It's interesting how it's jumping around, but if I can get $2 on the trade, that's a pretty good fill. I can keep the strike the same, get an extra $200 of income by waiting an extra 2 weeks. If you're deep in the money, no, Rich, because if it gets called away, it's going to get called away with the stock. Like I have a covered call, but I have the shares. So like the broker's not going to call me away and assign me short because they just close my position. So that's why the roll is important. But that's a good, yeah, before expiration, it's a good question. I just wouldn't want to take this like the day of expiration. Usually if you own long shares and you have a covered call, you're not really a candidate to get assigned in that short call because it's attached to your shares. Does that make sense? So a broker usually looks at my position as I own the shares, I'm selling a call on those shares. They shouldn't take that call and try to, assign me short because all that's going to do is liquidate my position. So it shouldn't be an issue if I have the shares. If I had just a naked short call, then sure, I can get assigned, anytime. Okay, so if I roll this thing out to the 15th, I think what I'm going to do here is, I do expect us to get a bit of a pullback. This is in the money, and the call premiums are pretty decent. And by the way, to you kind of sense how rich are these premiums? Well, if I go 586 plus the credit of 53.64, that's giving me about a $2 premium on the current price. That's kind of good. That means that the call premiums are worth selling. Now, what I'd like to do is go out maybe a bit further towards the end of August. Okay. So the end of August, I can roll this thing out for $5, which will take my cost basis from, where's my tracker here? Takes my cost basis from 553 all the way down to 548. So if I go from 553 minus 5, get it called away at 586. Okay. Now I'm making $38 a share instead of $33 a share. And I can keep doing this. My plan is to keep doing this. Okay. So if I keep it at 585 for $5, that's pretty good. If I roll it up to 586, okay, get 363, keep the strike the same. That's not bad for 360. If I want to roll it up another dollar, I still get 260 and I increase my profit by $1. So this helps me gain an extra $3.60. This helps me gain an extra $3.60. This one helps me gain an extra, let's see, $2, 360. It's kind of interesting how it's all kind of, I'm going to increase my cost by about $360. I'm sorry, increase my profit. 589, this would be up $3.70. I'm going to kind of find the sweet spot here. I don't mind keeping the strike the same and grabbing 350 to 360 on this roll. That's pretty good. This one, I get $1 plus 265. It's like, 365-ish, 370. Let me see if I can I'm going to do this one. I'm just going to keep the strike the same. And then these should increase. If we get a dip in the markets, these should increase for me. So I'm going to try to roll this for 360. Got filled at 360. Okay, so I just got filled at 360 on a roll, which means now going all the way down here to the bottom. So 553.04. So that's my current break even. And I'm rolling rolled to 8/29 expiration, 586 sell call for 3.60 credit. So that break even would be 553.04 minus 3.60. So 549. Oops, 549.44. Everybody see that right there? So 549.44, and my call away strike is still the 586. So I'm not quite at $40 a share, but remember, this trade started out as a loss. Okay, this trade started out as a loss of $230. Okay, now if I don't do anything other than let this call expire, this is going to be a win of around $3,800. And again, I'm not saying this is like the best way to do it because obviously I could have just bought the shares. I bought the shares at 496 this year on the SPY. And that 496 buy, I rode this thing all the way up to 596. I took $100 profit. Now, I wasn't fully invested. I bought, I don't know, $10,000 worth of shares or something like that. It was less than 100 shares. I bought, like 15 or 20 shares of the SPY, but I pretty much bought the bottom. I bought the Qs at the bottom within, this is within about $14 off the lows. I bought the Qs around 410. So this is the SPY trade that I bought in April, and then the Qs during the April bottom, I bought it around 410, and I closed that one out about $500. It's trading up into the five pluses right now. So it was good timing, I guess. I definitely left some profit on the table. But if price goes sideways or lower, I'm still getting income on these trades. I'm still decreasing my cost basis, still adding to my net winner overall. Does that make sense? Okay. So now on this account, I still have the shares. I closed out the 586. That's this Thursday. And I rolled that out to the 29th. So now that trade is added 29 days of time. And I kept the strike the same at 586. Okay. But that gave me a net credit for $3.60, which is just going to help increase my bottom line. If I do that August, September, October, November, December, let's just say on average, I can get 360 and I do this over 5 months. That's adding another $1,800 to my profit. Okay. So $1,800 more on top of the $3,800 I can have now. I can turn this position into a $5,600 position profit, which is about 10% return on that capital. I mean, this is tying up about, I don't know, $55,000 in cash. It's obviously a margin account, but if I do straight cash is like $55,000 and I can make over $5,000 on the trade. So I'm getting close to like a 10% return on that, which isn't bad. It's not bad. To me, like the safe thing about selling covered calls is if you can do the basic math, it's a really simple way to stay in the trade, generate income on your investment. Okay. So here's something kind of nuts. I'll show you just like how cool covered calls can be. I know they're boring, but when you make money, nothing's boring. In my opinion, give me boring. Okay. But here's something that's kind of nice. If I did let's say I want to own shares of the SPY. Okay. And I think the SPY is going to, 700, whatever. If we buy the shares right now of the SPY, we buy the shares right now. Okay. So if I buy shares of the SPY at 637, if I go out a year and sell a call at this price, so we're going to go out to July of 2026 on the SPY. Everybody with me? We go out to 2026, go out a year. We go to the June 30th, 2026 expiration, and we're going to sell an at the money call. Okay. We can get $50 for that trade. So if I buy the shares at 637.63, take away $50 and let's say whatever bid price at 15. So our break even's 587.48. 587.48. Okay. Now if it gets called away where price is at or higher than 637, okay, we're going to make about $50 a share. Well, $50 a share divided by 587, that's an 8.5% return. Okay. That's an 8.5% return. Now, the reason that this is right around the norms is what's around the average percent of the S&P every single year. If you go out the last 70 years with the ups and the downs, what's the average return the S&P provides for most investors? If you're a buy and hold investor, it's about 8%. Okay. So if I were to buy shares and go out a year and sell a call, the market's going to basically say you're going to get the norm. You're going to get the average. So what I'd like to do is if I'm a little bit more active and I'm not just going out 12 months, is every 30 days. every 30 days, every 30 days, every 30 days, every 30 to 45 days. Something in that wheelhouse of like every 30 to 45 days, if I can sell calls, I can probably get more premium actively selling over a 30 to 45 day window. And if that helps me decrease my cost basis more, if that helps me, you know, lower my cost basis and still like I can decide timing wise market, I can decide whether or not to let the price appreciate. So I'm just trying to make a bigger win. That's all it is to it. I'm just trying to make a bigger win. But I feel like I can do that more confidently, like every 30 to 45, 50 days versus just going out a year. Because if I go out a year and the market melts up another 10, 15%, well, I'd rather participate in that 10 to 50% upside versus capping my gains. Right. So anyway, when I sell covered calls, I typically am not going out more than like maybe a couple of months. Usually I like to go with like indexes. I like to go every 2 to 4 weeks. A stock individual stocks, I typically go out like 1 to 2 months. Trying to generate some premium, trying to lower my cost basis, calculate the number, like what's my break even, calculate the break even and my profit, and just keep it, roll it, and kind of do it indefinitely until I'm happy for the stock to call away. In some of these managed accounts, there might be an example where it's like, yeah, by December, I might just let the shares get called away because that way at least I can mark a gain for the year, right? I can mark a gain for the year. I can take the profit, get the buying power back, and we can kind of start that campaign over for 2026. Okay. So that one's rolled. I have to do this. So this is on my to-do for the week. I have to roll. Let's see here. That one's good. Anything else? These all look pretty good. Okay. So that SPY trade should be taken care of. Tesla, call. I'm going to let this one go a little bit longer through the week. These are in the money covered calls on Tesla. I've lowered the cost basis on Tesla down to like 220, 225. So kind of the same thing. Tesla's trading at 324. Even what I sold last week on Tesla, that ratio spread is up almost full profit right now. This one's probably a good one to take some profit on. I issued this for, this is a Newsbreakers trade, or I'm sorry, a Project Options Edge trade. This is up 92.4%. I'm going to go ahead and just take the profit. Most I can make here is an extra $13 by Friday. I'm going to go ahead and just take the profit. So for Project Options Edge, this one to me is worth just closing. Okay. So pulled in $1.85, close it out for 15 cents. That's $1.70 keep. So Project Options Edge right here. This is the trade that I took on Tesla. So trade management. Keeping 170 of the max 185. And that one I track here. So that Tesla ratio spread is a winner. Okay. So that ratio spread I can get rid of. So I'm taking the profit there. This one I'm still going to work with. I'm only down. I mean, I don't want the extra assignment here. This one is only down. This can't be right. Actually, it might be okay. We're at 324. It shows that I'm only down $30 right now. Let me go ahead and just look at this trade. So I pulled in $1. I mean, actually, this isn't a bad trade. I can take the small loss in this one. So here's how the math works. I lost $1.30 on last week's newsbreaker trade. I'm only down 25 to $30 on this trade, but I have the shares that can be repaired for like $1,000. So I lose. Just do the math here. This is like 3 trades. So I lose 130. I make 170. I lose 30, but then I make $1,100. I'm still up over $1,100 and change in these positions on Tesla. But with Tesla, I also want to keep the shares and kind of roll this thing more. So this is the collar trade that I have. It's funny, like this collar trade is already up, $700, which is interesting. Collar trade here. Bull put spreads are up. So I think on this one, out to the 8th, that's not this Friday, but next Friday. This one is only down about $30. I'm just going to take the loss. I'm going to try to get 155. Not filling. Try to penny this up. So I'm willing to take the loss in this one just for like 20 to 30 cents. It's a bit wider than I'd like, but this is still all right. So $30 on the trade. That's fine. That way I don't have to worry about the assignment. If price is under my, 332, it's still a spread. It may not get assigned, but I don't want to have the assignment. So that way I eliminate that assignment. Now my attention will focus on these for the rest of the week because that is a naked put, which I'm fine for some profit on. That's up $445, but I can make over $800 on that trade. And then for the covered side, cover call at 280, cover call at 260, 260, 260, 260. I'm just going to keep rolling these. I'm going to let this go through probably Wednesday, Thursday, and then look at rolling these out. So we'll talk more about that this week. So Tesla's on the to-do list still. SPY is done. So I can put a check mark on SPY. I still need to do Intel, Tesla, IWM, UNG, and JD this week. So I'll sprinkle this in with some of the daily profit play this week. All right, where's our price at today, by the way? Typical Monday. How many daily profit play members are just crushing it for a little daily profit play? Here's the day. Have we done anything today? Not really. Perfect for a daily profit play. I feel like Dave's probably killing it. Larry's probably killing it. Mark's probably killing it. Who are my daily profit play? Premium. Price has been doing absolutely nothing for us, which is perfect. That's exactly what you want. So a nice non-directional day for daily profit play. And we did a quick win this morning. Totally happy with that. And it would have been roughly the same profit. I mean, if it was whether I'm taking the call side and the put side, trying to grab 50, $60, I'll look pretty good. Susan's in and out. Good. Okay. Good stuff, everybody. Well, hey, I'm gonna take just a small breather, maybe go grab a coffee, but I'll be back at 11 o'clock if you'd like to join myself. It should be Jeff and Alex and myself today for Profit Panel. You can join right here. So we are in prosperitypub.com/profit panel. You can see if I can copy that link. I'll share this in the chat. Here you go. So I'll see you at the top of the hour if you want to join us in about 10 minutes. Coming into tomorrow. So lesson today on earnings, a little bit of tapping into covered calls, rolling calls. We'll spend some more time on that this week since I have more symbols to work with. I'm still going to be pricing out some trades for my newsbreakers this week. There's still a whole list that I took right here. So this whole list I'm still watching. I need to price these out. See if I can find a trade that I like. And just make sure for Macro Monday, we know what's at stake this week. Okay. What's the news going on this week? We have a huge earnings week with over 700 companies, including Mag 7. We have FOMC on Wednesday. We have a non-farm payroll event on Friday and the trade tariff deadline, which I don't think the tariff deadline is going to be nearly as impactful because Europe is coming to the table this week. Japan last week, Europe this week. Those were two major allies and trading partners that are now, aligning with whatever deals we're trying to put together. So at this point, I still think the market needs a correction. I don't know what the why is going to be. I don't know what the catalyst is going to be. Maybe there's some earnings disappointments this week for whatever reason, maybe. But as we roll into September, I don't see August being a really bullish month. I mean, a lot of the world goes on vacation. So Europe's on vacation. Volumes are very light and low. So if the currency market does something silly, It's going to affect the stock market. If we have some, I don't know, I don't know, but technically speaking, I think the market registering a new overbought condition with divergence. I think the market's due for a pullback. It's not difficult to look at the chart on the technical side. We have overbought, okay, overbought with divergence. Minimum pullback, in my opinion, is a pullback to the 21 period and the 50 period or this previous high. Minimum. I don't know what the reason is it's going to pull back because obviously it's not just going to do it all on its own. It's going to be something. But is it going to be the FOMC? Like that to me is a reason for like the market to maybe melt up an FOMC and then fade it after. Just the market needs a reason, and between earnings, FOMC, I mean, if Trump is still vocal about Jerome Powell this week, that could be another perfect catalyst for like Trump to say something on Powell and the Fed. The market doesn't like the idea of a shadow Fed. The market doesn't like the idea of pressure on Powell to resign. So maybe that's kind of this story that's brewing. But none of that matters because I don't know the why. I just know that this market should correct. If it doesn't correct, I'm literally going to sit here every single day in daily profit play and call the top and fade and fade and fade because I'm confident that with the VIX at where it is, okay, it's difficult for the market to go higher when the VIX is going lower. We can kind of safely call the tops every single day. Okay. It's not like, tons of credit here, but the highest probability for me is safely call the top, because this market is it's very hard for the market to rip a full 1%. The market going up 0.4%, 0.3%, 0.2%, it can do that every single day. Fine. Enjoy it. But it's hard for the market to rip up 1+%. And if it does, I'm selling that. In an intraday basis, I'm going to sell that. Okay. So I am going to actively, just like I did today, kind of fade the top, kind of fade the top, kind of fade the top. And why? Because it's easier for the market technically to fulfill the correction I'm looking for. And at some point when that happens, then I'll start buying again. But I'm just selling calls, taking good daily income, and just trying to enjoy the melt up and then have some downside protection when the market inevitably makes a correction. Okay, nice, Greg. Good stuff, good stuff. Expiration of that new SPY call. So you're talking about the one that I rolled, Rich. I rolled that one out to the 29th. So this was a roll to 829, and I kept the strike 586 covered call for 360 credit. So when the question came up, how much do you roll for? You can see that I don't like to roll for debit. I like to roll for credit. So if I'm going to roll it up in strike price, meaning like I want to increase my profit, I want to roll it and still get a credit for it. Okay. But today I thought, lowering my cost basis by $3.60 and hoping that we get a little bit of a pullback, that could be good. That way I can roll some more, like premium, swells a little bit, and I'll see if the next roll is a little bit more lucrative. Okay. All right. Join profit panel in about 5 minutes. I'll see you in a little bit.